Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Stellar and its crypto XLM, conduct machine learning based price forecast, regression analysis, and estimated bull run target. For XLM, none of the content is financial advice. The market cap for XLM is still over $10 billion. The price is at around 33 cents, volume at around 280 million. And if you look at the crypto heat map, it's one of the survivors over the last 90 days. None of the content being financial advice. Rally about 230% from its price 90 days ago, but over the last 30 days again most of the cryptos are down of the last 7 days as well, and there is some recovery over the last 24 hours. So let's look at XLM in detail. Again, the heat map that you just saw was available on cryptoweeklies.com under this heat map section. This website is entirely free for all. You don't have to pay or sign up for anything or watch any ads. This is personally developed by me. In terms of the XLM's price and tokenomics, about 50 billion max supply, out of which 30 billion or 60%, slightly over 60% is in circulation. If you look and toggle between the price view and the market cap view over the last 1 year or so, you can see the charts are essentially same. That means any growth occurring in market cap gets reflected back in price. By market cap, it's ranked number 14th, so definitely in top 20 cryptos by market cap. If you look at some of the narratives over the last 7 days, and especially popular over the last 24 hours, again, although XLM is not in this one of the top narratives, it does come into the category of, again, bullish price action based narratives, as well as again one of the altcoin related narrative. And let's check if the machine learning based price forecast for XLM, how it looks like, and what are some of the theoretical upsides and downsides. For the model, again, the directionality forecast says that the likelihood price goes up in the next 6 months is higher than down, based on this pink line which has an upward bias. If we look at the current price at around 33 cents, again in the next 6 months, if there is a bull case for XLM, the price could go somewhere between 40 cents as high as between 40 cents and $2 per the machine learning model. If there is a pullback, the price could be between 13 cents and 28 cents. Again, this, what does it mean? Am I telling just that the price goes up or down or sideways? No, that is those are the three potential scenarios at all times, but the market decides those price actions. What this forecast particularly deals is, first is an attempt to identify the directionality, whether the likelihood of price is going up is higher or down. Then that is established by this pink line, and if it were to go up, how high can it go? That is established by this yellow line. So that those are the purposes of the two different purposes for the forecast. The tabular valuations are also available week by week levels. The base case, which is this pink line, the bull case or the yellow line, is to its right, and the green line is to its left at 68 percentile confidence level. So those are the XLM related price predictions. If we look at the regression based analysis for XLM, again the fair value is at around 30 cents. That means the current price is pretty close to the fair value. You can see that roughly in the last week or so, the price did go slightly below the 30 cent level. The lows were at around 27 cents, and that means if the downtrend stops, this is a good support level for it to stop. If we apply one standard deviation residual to it, again that could be a non-euphoria bull case recovery for XLM at around 51 cents. The two standard deviation where major resistance occur, again you can see even in the rally that which got sold off in November, was at that time the two standard deviation peak was at around 60 cents. Right now, if XLM were to top, that two standard deviation ceiling is at around 90 cents. So that is a key level to watch. And if we extrapolate this to the next 6 months, we have a different model for that. If we look at the DCA model, which takes into consideration the polynomial regression model that we just saw, and it does attempt to extend somewhat in the future what the fair value could be in, let's say, 6 months into the future, somewhere close to that $1 level. And if we apply the two standard deviation residual Right now that 2 standard deviation residual we saw that around 60 cents. If we extend it to the next 6 months, that could be somewhere between $2 and $2.50, which is quite confluent with the 2 standard with the bull case scenario that we saw in terms of the machine learning based price forecast. So that $2 level is a higher end of the target, moderate end of the target at around $1.19 or 20 cents, which is confluent with the regression based analysis based 2 standard deviation upper bound right now at around 89 to 90 cents. If we look at some of the risks associated with XLM or stellar accumulation, at this point it's gone down by about 30%. Again, this model did identify that 95% risk with this red color code. We did make several videos at that point in time, early December of 2024. Again, back then the price at around 57 cents did represent 95% risk, and we made a update on our model saying that the risks are elevated per this model. If we look at some of the moderate price target per this model going forward, 60% risk at around 55 cents, that is the beginning of the moderate target, ends at around 63 cents. So price action between 55 cents and 63 cents corresponds to 60 to 80% risk. Above 80% risk is anybody's guess if the prices eventually do go to that 95% risk like they did back in early November. That level is right now at 70 cents. So back then that 95% risk was at around 57 cents. Now it's at around 70 cents. So that's the purpose of this model, to identify some of the price targets at several risk levels. Again, in terms of the DCA based approach, this is based on the regression and time adjusted regression based estimation, helps identify some of the low risk accumulation time periods. Again, you can see whenever this the hypothesis being only DCA, whenever the risk levels are less than 20%, you just help with this model, you just help yourself do a favor to avoid DCA whenever the risks are elevated, again per the model. And this is not a historical or retroactively fitted model. This again has a utility at this point in time where the risk levels identified at around 33%. So you can see this blue shaded region does offer a significant level of decent buy zones or DCA zones. Right now the risk level is at around 32%, roughly speaking between 20 and 30% risk. This is normalized risk, and the targets per this model for XLM is between 43 cents at a moderate risk level between 43 cents and about 60 cents, which is close to the previous high that XLM had in 2024, between 43 cents and 60 cents, and the higher end of the target between 62 cents and about 76 cents. So if we take into consideration the last model, which is the time weighted average price model, again the time weighted average price model based, this blue line which represents the time weighted average price, helped create an accumulation zone in the bear market from roughly speaking April 2022 till about November 2024, again when the price was below the blue line. Again, we made several videos in the recovery year of 2023 and early 2024 related to XLM. You can check it out on the websites and also on the YouTube channel whenever we have made those videos. If we look at the estimated bull case target for XLM, the 33 cents price represents about 33% regression or DCA risk, 59% time weighted average price risk, and 30% SMA risk. Weighted risk is at around 40%. That means estimated bull run peak per the risk reward approach for XLM is coming in at around 80 cents, representing a reward of about 2.3x from the current price. And with that, I would like to conclude the video by saying the first level of confluence for the risk based target is between 42 cents and 60 cents that we saw in terms of the DCA model. The second level of target at around 70 cents, which represented the 1 standard deviation ceiling, and the third level at around 90 cents, which was corresponding to the 2 standard deviation residual for the regression based approach. And those are the moderate targets, and the lofty goals for XLM at around $2 per the machine learning based price forecast. And hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.